Back to the gold market. So, straight to business. Good morning, good afternoon, and good evening, wherever you're watching from. So, yeah, this is what I'm looking at. I have buy orders at 4819. Expecting price to go higher from this point here. So, at the moment, you're just being patient, waiting for adjustment down to here. On Fridays, I will be trade London session. Yeah. Patience, patience, patience. So let me walk through yesterday's trades. Okay, yesterday's trade in the New York session, I took a sell at around it was around 4887. Yes, it was 4887 actually. I had cells placed there. Just that because of my constant, what should I say, constant stop of 150 pips. That's my risk on a constant. Um, I was wicked out the moment price got there and see how many pips price powered. Oh my god, I watched this whole move play out without me being involved. This is around 2000 pips. 2000 pips. But all I needed were 10, wow, 1K. All I needed was 1000 pips. Yeah, as my final TP. So, anyway, fast forward, it's part of the game. It's part of trading, and go through all this. Price just ripped all the way down. So, it's not a bad thing. It's nothing really sinister to think of, uh, or because it's part of the game. Yeah, we have to learn. Yeah. Now, this entry is in a 4-hour fair value gap, which has a good price, an area. Now, within this consolidation, I marked out this order block, which aligns with, which is just resting below 800 for 850. And I expect price to drop and fill me in and then continue higher. Generally, I'm bullish today. I'm bullish for the day. Yeah. So that was my trade for yesterday, by the way, and yeah, it was a good trade. It was a good trade because I was correct. Just that market, if because I did I went back and go because I see my accuracy based on the line chart. So what I do, of course, with time I'm going to increase my risk from 150 to 200 to make it a little bit level, better, safer, because they say you have to let your trade breathe. But then again, this risk is 1% of my account, whatever for according to the number of entries I make. This risk that I take here is 1% of every time I trade 1% of my funded challenge or my funded account or my challenge account. So now if I go to the line chart, you see that I was actually correct to the tick, actually, almost to the tick when it came to the line chart. Just that inefficiency swept me out. Sometimes you wish the market didn't have the candles, didn't have wicks, but what can I say? They do, they do. So that was my trade for for yesterday, and now price has reached a level. Actually, if you're a scalper, you could scalp this. You could have scalped this drop, but it didn't reach 50%. So I still I can still be skeptical about it. Yeah. So otherwise, this is a good setup. So far so good. I'm following my plan. Question is, will we leave this as a fair value gap and the next 1 hour use that candle to fill it and go higher? That's the only question I have right now. Or we're just going to weaken and leave an inefficiency, actually a balanced price range down here. That all depends. It's currently raining outside. It's very cold as well. So this is London session. Just London session has just moved. Um, 400 pips so far. Yeah, but I expect us to move a little more. Yeah. the thing is, I don't need to be watching these trades because I already have limit orders set. Yeah. Buy limit orders are already set. So I'm just waiting for execution. See, our orders empty 5. So yeah. I'm waiting for the DXY. The DXY should keep moving higher for now because we almost have the same playbook with gold right now. So let's see. I'll be doing a backtesting live session, I think, tomorrow about 1. Backtesting the strategy and seeing how much it has developed over time. Yeah. The boring part of trading is the repetition. We have to keep repeating the same thing over and over again. When you know your risk management, the chances of you actually failing is very slim. Because if you're risking 1% per trade, let's do the math, yeah? Let's do the math. So here, let's see. Let me first check on these devices. Okay. So there we go. So let's do the math just on the side here. Let's say for those who are trading prop funds, let's say you have a 5,000. Let's use a $5,000 account, and maximum drawdown is, let's say, 500, and then profit target is 500. First phase 1, if you have phase 2, then phase 3 is 300, right? Yeah. So this is what we have. Now, let's say you're risking, forget the 5K, just forget the 5K. Let's just assume. I don't know if you can strike through this. Let me strike through. Anyway. So this is what we are looking at as our numbers. Let me make it 20. 5K account. So your account is 5K. And then max drawdown is 500, right? And I really want to have this in order. Then yeah, all right. Then we have phase 1. phase 1 being 500, and then phase 2 being 300, right? I want to give you the math. Come on. All right. So this is our count, maximum drawdown, phase 1, phase 2. So with an assumption yeah, that you lose, let's say you're 50% profitable. You're only risking 1% every trade, right? So now this will depend on how much you make every time you hit a take profit. If your risk to reward is 1 to 2, it will be different from someone whose risk to reward is 1 to 3. So on average, let me assume everyone's risk to reward is a 1 to 3. Let me make that assumption. So, I can say 1 to 2. Yeah, 1 to 2. So we are not going to put in any amount of time. We're just going to say how many, we are going to look at how many trades you need to actually pass phase 1 and phase 2 if you're passing. So I'm going to do some math on my phone. Let's see. So if you're having, every time you lose 50, right? Yeah. And every time you win 50. How many trades will it take you to reach 500? So let's see. So a 1 to 2, it means you need about 10 trades, 10 good trades, perfect trades to reach, 5 good trades to reach 500 to get to pass phase 1. So you're getting $100. The first trade is 100, correct? Let's say every time you lose 1, you win 1, you lose 1, you win 1. So 100, then the second trade, let's say you win, assumingly, that's 200. The third trade, you lose, minus 50. Then 150 minus 50 again. Yeah, those are 4 trades. You're still on 100. Plus 100, then 200. We're going to create a tally system. So now we're on 6 trades, right? So let's start over again. So trade number 1, 100. Yeah. Trade number 2, minus 50. Trade number 3, plus 100. Trade number 4, minus 50. Trade number 5, plus 100. Then trade number 6, minus 50. Trade number 7, plus 100. Trade number 8, minus 50. Trade number 9, plus 100. 10th trade, minus 50. So 10 trades, 250, which means you need 20 trades on a 50% win rate. 20 trades to make phase 1. Now there's some firms that actually just give you that you have to reach your target, you'll need 400. So that means you have, instead of 10, 20, you have 16 trades to take. Then for phase 2, which is 300, that means it's about, this is 20, it should be about 15 trades to pass phase 2. So you'll see that with a 50% win rate on a 1 to 2, now if it's a 1 to 3, it's even faster. But let's assume we are just assuming that you're trading a 1 to 2 system. So as in your risk to reward is 1:2. So that means you're going to have 20 trades. when it's 1:2. Then 1:3 will be about 12 trades. I've done the calculations, and then 1:4 will be just 10 trades. First phase one. So when it comes to phase two, when it's 1:2, you need about 15 trades. Then when it's 1:3, you need about 8 trades. Then when it's 1:4, you need about 6 trades. So your risk to reward matters a lot. Your risk to reward matters a lot, and also your system. So you don't come to the market to apply a strategy. You come to the market to learn how the market moves, that your trading moves. Look at the way the market is actually moving. Look at where the highs are formed. How are those highs formed? How are those lows formed? Where are the fair value gaps formed? What does price do in certain sessions? Because if you look at gold, gold has certain areas that it goes for. That's why you see me marking out particular order blocks, particular fair value gaps, not just because they are order blocks or fair value gaps, but because I've studied that during London session, gold will normally move to this inefficiency. Gold will normally move to this fair value gap. Gold will normally do this, do that. So that's what I look for. Now you look at a trade. You look at this, and if you're trading, if you're taking one trade per day, and in a month it's about we have 20 trading days, and I'm assuming you can't get a setup every single day. That means you'll have like at as a random distribution, I'm going to use 15 trades. So out of those 15 trades, you need to pass to get funded. You need 15, you need 20, 20, 35 trades. That means you have to trade for 2 months, approximately 2 months, to get your account passed. Then, if you're getting a 1 to 3, that's 12 plus 8, which is 20. You can pass that account in 1 month and get funded. If you're using a 1 to 4, you can also clearly do it in 2 weeks. 2 weeks you can pass the account, risking 1% of your account. It sounds like a long time, but trading is all about patience. Yes, I know in the Forex in the industry, there are traders who pass accounts in 2 days, 3 days, 4 days. But these guys have capital. They are not surviving on that small account. They are not surviving. They actually have what they can turn back to. They can return to the account. They can refund the money. They can buy another funded account and trade it again aggressively. You'll find someone has a strategy where he risks he risks the whole. Though these days now, firms are being a little strict with the 1%. There's a 1% rule that's coming up now for most firms. I think Funding Pips has it. Um, Funded Next, I think it's 3% maximum per trade. That means all your open positions have to add up to 3%. And then yeah, that is it. So for if you're trading, let's say on Funded Next, and your maximum is 3%, so that means on a $5,000 account, you're risking $150. 1 to 2, you're making 300. 1 to 4, you're making 600. So if you're a trader who has a 1 to 4 strategy and you hit it, you get it right, you pass your account with one trade. You pass phase one with one trade. Phase two becomes really easy because if you can pass phase one. Now, to do this, because wins and losses are randomly distributed for every trader, no matter how professional you are. As long as you have an edge, they're randomly distributed. So you don't know when you're going to lose and you don't know when you're going to win. But you know that your strategy works at particular times and at particular areas. And how they are going to work does not matter to you. But how you execute them is the only question. Are you executing it out of analysis, or are you executing it out of emotions? So now prop firms bring out that emotion. The advantage of trading a prop firm is that it trains you to handle bigger capital. So if you have your own capital later on, let's say in future you've got your payouts and you've grown your personal account to 5,000, you've deposited it in any broker and you're trading it, you're not going to be afraid of risking that 1% to make your normal trades. And the more you make the money, you realize that, okay, since you've come from trading $100 accounts, $10 accounts, and now you're trading 5K, why would you be afraid to trade your personal account with $10,000 and losing $100 per trade? Yet your funded accounts can actually get you a payout that's going to fill that gap. So it's basically you're having different channels of of funding your personal account. So the target of every trader when it comes to having funded accounts is not to have um, to have your prop firm account forever, but is to utilize that prop firm account to get you capital, ample capital to fund your personal account. So if you fund your personal account, you're going to be free from all these rules and regulations, by weekly withdrawals. All right, yes, I love prop firms because they keep you disciplined. You can't just put in, high frequency trading, what on these prop firms. They're going to flag you, they're going to shut you down. You'll just receive an email and you no longer have your account. So it's like a school. There's actually some unfunded next. There's I call it trading school. They can take you to trading school actually, where because if you've been misusing your account, you're not they increase your stop loss, they reduce your trading frequency, they just tighten everything for you. You become they make it difficult for you to trade, and you will automatically learn how to manage your risk automatically because you don't want to lose that account. So let's say you have a $100,000 account. Yeah. And I I have accounts on got funded, my funded funding pips, funded next, and the fivers. I also have some accounts there, and I'm trading all of them, and they really have good trading conditions. I've not yet gotten an FTMO account because I want to use FTMO for something much bigger. So I have multiple 5K accounts. I want to get. By the time I get an FTMO account, I should be able to. I should have gotten payouts from these accounts. I want to focus on this whole year trading 5K accounts, and if I'm to scale up, I'd want to scale up to 50K. So next year is when I'm going to look for 100K accounts and trade them then. I believe I'll be prepared by then to trade them. As for now, 5K accounts, I have about 10 of them that I'm trading at the moment. Um, I trade one after the other, one after the other for slow growth. And in general, I have a portfolio of about 50K, $50,000. Yeah, one of them is already funded. I passed that account, though I haven't gotten a payout yet. Um, after getting funded, I got excited, I over risked, and I put me into drawdown. So I've been really struggling to get it out of drawdown. Truth be told, I've been a little skeptical with trading it because I don't want to lose it. It was my first ever funded account, and it's yeah, my first ever funded account, and I messed up. I learned a lesson. I didn't actually traded it to about I was in I pushed it to 2%. I was 2% up. Then I over leveraged and it took me down. Right now kept trying to struggle to save it, but I'm now down about 6% on that account. So anyway, according to I have three more trades to take on that account before I blow it. So I think I hope I can save it. I hope the trades I take on it are actually the ones that play out. If that's so, then all I need is three trades on it, and I'm out of drawdown into very good profit. Yeah, but then until then, only God knows. So back to the market, gold is dropping to our entry, and yeah, let's just wait for that. Let me first take a look at silver. I believe it has dropped 50% in a week. This is serious. This is XAG. So a weekly chart. Wow, wow, wow. Okay, this is serious. This is the low, right? And this is the high. And discount. Oh yes, it dropped 50% from the all-time low. About this is serious because the all-time low is around here. $4, pounds, almost 50%. Silver dropped almost 50% of its initial range. So what does this mean? So we are having market structure shift on the 4 okay, and 10-minute chart. I really try and trade silver as well. My intrusive thoughts are kicking in. So I think I'm going to study silver this weekend as well. Looks interesting actually. Because you see yesterday's trade that didn't fill me in, would have filled me in on silver. Here. Clearly would have been filled in. I don't know if the math of the pips is the same. It's a little bit different. So okay. Then this should have been a very good sell for me. Price dumps. Then let's just say it's fair value gap. And then this was New York. New York had an opportunity. London session would have opened, and I would have expected it to reach at 82.7 something, 82.800. That was the high for London session. It was so much bearish, so I was feeling this gap, and I would use this as an entry. This fair value gap here, it's displacement leg here. Should be my London trade, my selling opportunity. Would it be to the tick or miss it? I would have actually taken this trade. Entry on point to the tick. Wow. 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 This would have been a good setup, really. Wednesday. London session opens. Let me see the prices here. Yeah, definitely. This would have been another setup for me. Buy entry. Definitely. Then sell on the New York. Sell this fair value gap here. Boom. Wow. wouldn't have been filled in because my entry would have been in the middle with it. It actually makes sense to me. No, I wouldn't have. I wouldn't have really. Yeah, maybe one of these fair value gaps, which I wouldn't have. These other blocks now. So I don't have this trade for London. Then here again, 85,500. Yeah. Okay, 85,500. Yeah. This fair value gap would be a very good point of interest for me and would act as a good entry. Yeah. TP up there. New York session. This other block. Would I focus on this? Most immediate order block was this one, but it wouldn't be valid to me. Neither would this one, would it? No, this other block wouldn't. This one definitely would not. Yeah, this one would. So it would be a valid order block for me. Yeah, so there, that would be a good trade. But this was Asian session, so they're aligned with each other. Backtracking to London session here, yes, this order block did it have what we needed. So we have 76.0 down here, 77. No, I wouldn't have taken this trade. I wouldn't have. Maybe I would have orders here which wouldn't be trading. Then when price drops here. Oh, this is Monday. I don't trade London session on Monday. So I only trade New York session on Monday, which means market structure shift. I wouldn't force a trade here because I wouldn't see anything that aligns with my understanding. Yeah, it wouldn't have made sense to me. Maybe, oh yes, something to think about. Right here, beautiful. Yeah, I would have solved this. Asian session order block. Okay. This is quite interesting. Anyway, back to our gold market, where all our business is being done. Price is still dilly-dallying around here. 38 minutes to the closure of this 4-hour candle. Our window also closes in same 48 hours. A window to find a setup, which we already found. Yeah. So we are going to wick into this fair value gap, most likely. Always hydrate. Hydration is good. maybe we are having this, as I said in my live yesterday, because of this accumulation we're having during the New York morning session, we will distribute lower, then Asian session does a bullish move. Maybe we are having does a bullish move, and then manipulation, accumulation, then distribution. This could be today's playbook. Could, keyword, could. Yeah. It's just the opposite of what happened yesterday. So yesterday we had this accumulation. Yeah. Accumulating stops. Swept the highs, then dropped. So today we could have this accumulation of stops, sweep the low, and then distribute higher. So these are the playbooks we have. If you see the similarities, well, then you've been looking at charts for a very long time. Those are the similarities, the accumulation. Accumulate, sweep, distribute. Accumulate, sweep, distribute. So that's the playbook I'm expecting for today. So let's see if that's actually what's going to happen. Yeah, I think I can come to the end of my live now. It's been an hour, and we have a setup, but it hasn't been triggered yet. I'll update you in the free Telegram group. So I'm going to send the update of the trade by the end of the day. Otherwise, peace out, and I'm closing now. Happy trading and a very good weekend to all of you.